So, Finance Minister Enoch Godongwana just delivered the national budget on February 25th, and you know what? It's packed with changes that are going to hit your wallet one way or another. The real question is, what does it all actually mean for you? Well, let's break it down.
This is it, right? This is the big question on everyone's mind. And honestly, it's not a simple yes or no. The budget is a real mix of some welcome relief and some new costs. So to figure out where you land, we really need to look at both sides of the coin.
Okay, first up, let's talk about the good news. And there is some. After a couple of pretty tough years, the government has actually put some measures in place that are aimed at giving households across South Africa a bit of a breather.
Now, to get the biggest piece of relief, we first have to talk about something called bracket creep. It's a sneaky thing, really. Here's how it works. Say you get a small raise, just enough to keep up with inflation. Your actual spending power hasn't really gone up, but that little bump in pay could push you into a higher tax bracket. So, you end up paying more tax. For the last 2 years, this stealth tax has been quietly taking a bite out of people's take-home pay.
Well, for the first time since 2023, that is changing. The tax brackets have been fully adjusted for inflation. And let me tell you, this is a big deal. It's basically a direct counterattack on that bracket creep we just talked about, and it's designed to protect your income from being silently chipped away.
I know, a table full of numbers can look a little intimidating. But the key takeaway here is actually pretty simple. All of these income levels on the left have been pushed higher. So the bottom line is this. A bigger chunk of your salary is now taxed at a lower rate. And what that means for you is more money in your pocket each and every month.
And the relief doesn't stop there. If you're on a medical aid, your tax credits have also been bumped up to keep pace with inflation. You can see the numbers here, but for a family of 4, this works out to an extra 480 Rand back in your pocket over the year. Look, it's not a fortune, but in this economy, every single Rand helps, right?
But this budget isn't just about giving you a little immediate relief. It's also got some pretty powerful incentives to help South Africans build up some long-term wealth. And this is really important, because it directly addresses the country's notoriously low savings rate.
And here's a fantastic example of that. The annual limit for your tax-free savings account is getting a big R10,000 boost. That means you can now put away up to R46,000 a year, and all the growth on that money. I'm talking every single cent of interest, dividends, or capital gains is completely 100% tax-free. That is an incredibly powerful tool for building wealth. And for those of you focused on retirement, there's even more good news. For the first time in a decade, the deduction limit for your contributions to pension, provident, and retirement annuity funds is going up. It's jumping from 350,000 Rand all the way up to 430,000 Rand. This is a massive opportunity to really supercharge your retirement savings on a tax-advantaged basis. All right, so we've covered all the good stuff. But as we all know, a budget is always a give and take. So now we've got to flip the coin and look at the other side of the ledger, the areas where your costs are, unfortunately, about to go up. You know, this slide frames the budget perfectly. It really is a balancing act. On one side of the scale, you've got that significant tax relief and those awesome savings incentives. But on the other side, the government needs to raise money, and it's chosen to do that mainly by increasing fuel levies and, you guessed it, the usual suspects, the so-called sin taxes. So after a 3-year freeze, which was nice while it lasted, fuel levies are on the rise again. As you can see from the table, the total increase for petrol is going to be about 21 cents per liter. That's split across the general fuel levy, the road accident fund, and the carbon fuel levy. And you know this is going to have a ripple effect across the whole economy, increasing transport costs for just about everyone. And as you'd probably expect, the sin taxes on alcohol and tobacco are also up. But this time, vaping products are getting hit in a big way. This slide shows you exactly what that means when you go to the till. 8 cents more for a beer, 77 cents for a pack of cigarettes, and a really hefty R6.58 in tax on a standard vape pod. The government does note that these increases are all in line with inflation.
So this all brings us to a really crucial question. Why now? Why is the government suddenly able to offer all this relief after years of tightening the screws? Well, the answer lies in the bigger economic picture, which the minister himself called a significant turning point for the country.
This quote from the minister really gets right to the heart of it. For the first time in 17 years, the country's huge national debt is expected to stabilize and even start to fall. We shouldn't underestimate this. Make no mistake, this is a massive fiscal achievement and a really powerful signal that things might be getting healthier financially.
Now, this stability didn't just happen by magic. It's the direct result of a very disciplined strategy. And this is the key part. Tax revenues came in 21.3 billion Rand higher than expected.
That unexpected surplus is exactly why the government was able to scrap a planned 20 billion rand tax hike and give us this relief instead.
And looking ahead, the outlook is what you might call cautiously optimistic. The economy is projected to grow by 1.6% this year. So the tax relief we've been talking about isn't just about helping households. It's also a strategic move to put more money back into the economy, hoping to get people spending and investing to help us hit or maybe even beat this growth target.
All right, we have covered a lot of ground here. So let's bring it all together and boil it right down to the key takeaways for your personal finances. What does this all mean for you?
So what's the bottom line? Number one, you get some real relief. Your take-home pay is now much better protected from inflation. Number two, you've got new incentives to save. If you're in a position to, taking advantage of those higher savings limits is a very smart move. And number three, you will face some higher costs, so be prepared for higher prices at the petrol pump and for things like alcohol and tobacco.
And that brings us full circle, right back to our big question. This budget definitely offers a welcome moment of relief, no doubt about it. But the real test, the bigger question, is whether this marks a truly sustainable turning point, the beginning of a whole new economic chapter for South Africa, one that's built on discipline and growth. And for now, only time will tell.